Thank you so much for joining us for this masterclass, which is going to be helping us understand the emerging trends in the blockchain technology. And the keynote speaker that we have today is Jason Fernandes. And this is where my task is going to be getting. So I'll bore you up for the next 30 to 40 seconds because the laundry list of things that Jason has done, the incredible laundry list is actually elongated. So Jason is, of course, the Chief Business Officer at NFT Tech. And that's not it. He's a fintech and blockchain speaker. He served as an advisor to various international blockchain firms, government bodies, as well as political parties, state governments altogether, to make sure that everybody comes to know about blockchain. That's not it. How the entire career started was that as teenager, Jason founded Zero Cities. That was an internet portal. He also wrote for the chip magazines, the computer and communication magazines that we had. Post that, of course, he went on to do stellar things at the University of Texas, Austin. After that, started receiving multiple awards. So went on to also found multiple companies getting these awards, particularly in the IoT blockchain space. Jason in 2019 also was conferred with the Karamveer Chakra, which is a UN Global Civilian Award. And what was this? This was for promoting social and financial inclusion through blockchain technology. So a lot of incredible work in the space of blockchain technology, and therefore the veteran himself coming and addressing us for knowing the emerging trends in blockchain technology. As fate would have it, even I'm in UAE today, and he's a mentor, founder, the Institute of UAE. Not just that, the incredible work, what really piqued my interest above all of this, and being absolutely intelligent, erudite, brilliant, he's also the founder of LD Kids, Learning Disabled Kids Support India, for which he also won the Barbados government honor. So I'm really looking forward to knowing the emerging trends in the blockchain technology, considering it is the buzzword. And this will really help us get a better idea. Particularly, a lot of you already know that there is also Pro Blockchain Developer MasterCamp, where Jason is one of the masters that we'll be having. So I'm really looking forward to the entire masterclass. Over to you, Jason. I'll let you spearhead the conversation and help us understand the emerging trends in the blockchain technology space.
Thanks so much, Nirja. Yeah, incidentally, NFT Technologies actually went public in Canada yesterday. So we're now a publicly traded company, which is pretty interesting because that allows us to allocate capital to companies that are new in the space and essentially get that capital from the public markets, which isn't very, very common. There's very, very few companies that are able to make investments that come from the public markets. So it's like a bridge between the public markets and crypto. So very briefly, just to go over what everybody can expect. So first of all, thank you so much for joining, and thanks to the folks at Masters Union. So what to expect from this webinar? So I think I'm going to cover some of the basic areas. So what is blockchain? How do smart contracts work, and why these technologies are transformative? Also, how blockchain will interact with other emerging technologies, specifically to extend functionality, ease automation, and also basically revolutionize the way data is stored and accessed, for that matter. And then, of course, some real world use cases. So very briefly, the best way to start to explain kind of what blockchain is about is to talk about networks, right? Because there's a reason why they call it the blockchain network, and that's because it's one of the very first decentralized networks that have existed from the perspective of monetary policy, for example, right? And so you have like three main kind of networks. Let's look at the first one. The first one is a centralized network, which would be very familiar to anybody who's used, like, let's say Hotmail or Gmail, anything like that, where you have kind of one centralized entity that has all the information, or even a bank for that matter, and then you have essentially multiple people interacting with that centralized organization. These are actually, in terms of networks, it's one of the most it's really one of the worst ways to create a network, because it's not very secure, because you have a single point of failure that is in a centralized system. In contrast, you have distributed systems where you have essentially multiple nodes. It's a good way to think of it, of each of these things as a node. And in a distributed system, each of these nodes have full information. So like, imagine if you're thinking about a bank as being the centralized organization. In a centralized situation, the center node, which would be the bank, has all this information about all the entire transaction history and the ledger. In a distributed system, you have essentially multiple points where each of these things are nodes, which is probably one of the best ways to create a network. And then finally, Of course, there's a decentralized system where you have multiple nodes, and then you have basically people accessing it from each of those nodes from multiple different places. So probably like one of the best would be a distributed and decentralized network whereby essentially everybody has a copy of the ledger. So the interesting thing about like Bitcoin, for example, which is one of the a very, very early use case for blockchain, and one of the things that got it really popular is that, you know, you have this fully decentralized system where each of these nodes have their own data, have the data, the entire transaction history of the blockchain. So every node has every copy of every entire transaction that's ever happened on the Bitcoin blockchain. So therefore, if any one of those nodes were to go down, the records would still exist on other nodes, and then they would find consensus between them. So let's talk about more specifically what that looks like, right? So you have a distributed ledger system where essentially you have blocks that are linked to each other. There's a reason why it's called blockchain. And the reason it's called blockchain is because it's essentially like a series of data blocks that are linked together in such a way whereby you can't remove any one block and expect the rest of the blocks to have integrity, to continue to have integrity. And that's because these blocks have basically three properties, right? One is that they store data. Two is that they store a certain hash, which basically hashes that data. And then there's a hash of the previous block. So basically, the hash of each particular block is determined using a product of the data in it, as well as a hash of the previous block. So in that way, each block is linked to the previous block, with the exception of the very first block, which we call the genesis block. So very quickly, imagine you have, you know, data sitting in a block. And essentially, it's a lady transferring, you know, a certain amount of money via Bitcoin, for example, to another individual. So the first thing is you have the hash of the block, which is individual, particularly for that particular block. And then you have the hash of the previous block, and that's what you create a chain out of. Essentially, it's the data in the block plus the hash of the previous block, and then that data itself is together hashed to find the hash rate, the hash of that particular box. So imagine if you have, this is the first block, which is what we call the genesis block. The previous hash is 0 because it wasn't a previous hash. It's the genesis block. So the hash of this one is right here, and then you have the hash of the next one. And then you have, that also takes into consideration the previous hash, which is back here, the information contained in the previous block. And then those things are linked to generate the information that's required in the third block. Again, that third block is linked to the previous block. So if you take out any one of these blocks, the entire chain falls apart because each of these things are calculated based off of the previous block. So in order to take out one block and still maintain the integrity of the chain, what you would need to do is essentially recalculate the hash of every subsequent block, which would not be possible given the time limitations that most blockchains put on it. So just very quickly, like I mentioned earlier, right? It uses the hash of the previous block to determine the hash of the new block, plus the data, basically. So, and of course, the genesis block has no prior data. For example, let's say some sort of attack and somebody tried to change, the data in a block. Well, that would change the hash rate of that block. And immediately the next block would notice that that was not right because the hash rate of the previous block was different. So it would know immediately that there was something wrong with that. And essentially the whole chain would break down. So that's essentially the basis of proof of work, which is one of the consensus mechanisms that's most common. It's very common in blockchain. Another is, of course, proof of stake. And the way it's done is that, each new block, for example, on the Bitcoin blockchain, takes 10 minutes to be added, which means that there's only 10 minutes. Even if somebody were to be able to, maliciously change the information in one block, even though that information is encrypted, they would then need to calculate all the new hashes for all the subsequent blocks of data. And they would have to do that, in 10 minutes. So it would just not be possible based off of the size of these blocks. And of course, the bigger it gets, the more secure it is. So a new block is created after there's sort of a consensus where essentially all the blocks. So for example, when a new block is created, it gets sent off to every individual node. These people right here are nodes. And then between those nodes, they find a consensus and they're like, okay, this is the correct information. Now, of course, if one of the blocks is sent incorrect information, that would be rejected and consensus would be formed by the remaining blocks. This actually gives rise to what's known as the 51% hack. And that would mean if you had more than 51% of a blockchain that was controlled by people that were manipulatable, for example, then you could of course change that, because you'd have over 51% of the people to form a consensus. So how do transactions get on the blockchain, right? Someone requests a transaction. The transaction is broadcast to a P2P network, which basically computers known as nodes. So you have essentially computers all over the world. This transaction is broadcast everywhere. The node essentially validates that transaction. So it checks, for example, if there's enough funds in that wallet to make that transaction, and if that entire transaction is valid. If it is, then it becomes a verified transaction, and that can involve really anything. It can be currency, contracts, records, other information. And once it's verified, that transaction is combined with other transactions to create a block, because obviously there's not just one transaction in each block. There's multiple transactions in each block. And then once that block is finalized, it gets added to the main blockchain. And once it's there, it's indelible. It cannot be removed. It cannot be changed. And so that's kind of how you form that indelible link from block of data to other block of data. So essentially, blockchain is blocks of data that are indelibly linked in a chain. That's why it's called blockchain. So it should be pretty apparent why they're called blockchain. And by now, hopefully, you've also gained an understanding as to why blockchain is secure and immutable. If you have very quickly, it's because each block of data contains the data of the previous block, at least the hash rate of that previous block. And if that previous block were to change, that hash rate would change, and then the entire block would not be able to maintain integrity. So that's kind of the whole concept in the first place. So another interesting use case of blockchain is smart contracts. So smart contracts basically are essentially like Ethereum. So obviously blockchain has different use cases. Bitcoin tends to be, a really good use case in terms of, when it comes to transferring funds and things like that, notwithstanding the fees, of course. But Ethereum, for example, its main use case is to be to power dApps, right? Distributed apps. So Ether is the fuel that allows distributed apps to run. And one of the main use cases is smart contracts. So smart contract basically is effectively, you can think of it as a self-executing contract. It's like, imagine if you were able to program a contract to where it didn't require, a particular individual to comply. The compliance was done automatically based off of certain environmental factors. So a lot of contracts, one of the things about contracts is they're only worth as enforceable as they are. So if they're not enforceable, they're not worth much in the real world. However, on the blockchain, when you have a smart contract, the smart contract can also self-execute and ensure. So you could lock funds, for example, in a smart contract and set certain conditions for those funds to be released. And that would be, like an escrow, for example. And based off of that, you could program any degree of complexity that you would normally find in a contract. You could probably eventually, program that into a smart contract and allow these sort of things to happen, on their own. So very quickly, how does it sort of work? So let's say you want somebody to send money to another person via a smart contract. So again, he uses the blockchain to execute the transaction. The transaction is recorded onto the blockchain. Every party in network receives a copy of that transaction. The transaction gets approved, and then transaction is verified. Then it's added to the block. So in much the same way as I previously mentioned, like the Bitcoin blockchain works really very, 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 very similar, except the whole idea is you could really automate a lot of people's businesses. So for example, Airbnb, the way Airbnb works, if you're a host, you have, once somebody moves in, they have basically 24 hours. You don't receive the funds for the first 24 hours. You trust Airbnb though, so you're going to get that money. And then, if the person makes a complaint, he makes a complaint in the first 24 hours, then it's much easier for him to get his money back. If it makes it past then it's also much more difficult. And so Airbnb functions because both hosts and travelers may not trust each other, but they trust Airbnb as a platform. And they realize that Airbnb as a platform could mediate their disputes and could ensure that they get paid. Well, one could do that now with a smart contract, right? So one doesn't need Airbnb really. You could create a smart contract that said, let's say plugged into these things known as oracles. So what are oracles? Oracles are certain pieces of data so that you can call on. You can either find random numbers, or you could even say, for example, let's say you have a motion sensor in a property. You could say once that motion sensor is triggered, as in somebody moves in, it sets a 24-hour countdown for complaints. And immediately after that 24 hours, the funds are automatically transferred to the host bank account or crypto account. So that entire thing can be automated without one needing, an external party. Because really what Airbnb does is it just ensures that their rules are stuck to. And when you talk to their help desk and their customer service, they just ensure, hey, these are our policies, this is how things go. And then it's our job just to make sure that these things work according to policy. Well, you could replace that business with a smart contract. Very similarly, Kickstarter, right? Kickstarter is all about like raising funds in order to build, technology or maybe make a movie, things like that. But if you wanted to create, some sort of crowdfunding platform, even just for yourself, and ensure that the people have some sort of recourse should the event not go off or the thing that you promised not happen, you could do that with a smart contract and oracles, for example. So very quickly, where can blockchain add value? It can create currencies that don't require central government. So essentially, blockchain is about creating trust in trustless environments. And so it really works very well when it's talking about cross-border trade, because when you want in cross-border trade is you want to not have to depend on the whims and fancies of the individual governments and the politics between them. And for example, you also don't want to be, subject to macroeconomic forces like the government saying, for example, hey, we're, going to print a whole bunch more money, et cetera, et cetera. So you could sort of create a currency that doesn't require central government, that works on its own, it's self-enforcing. And then you can also create, regulation-free marketplaces that work on them. So these are some of the areas that they can add value. So very quickly, you should by now, of course, there's going to be a section at the end where I take some questions. So you should by now sort of have understood the idea between smart contracts and blockchain and why they work together. And then you may have understood sort of a bit about like how smart contracts can kind of revolutionize pretty much everything you're multiple industries by automating decision making, basically. So that's one of the main areas I wanted to go over. Also, just to recap, in terms of programming languages, smart contracts are usually programmed in Solidity. So Solidity is sort of the programming language that's used for Ethereum and what's known as EVM compatible chains. So for example, Ethereum is an EVM compatible chain. So is, most of the other blockchains are EVM compatible. So that's Ethereum virtual machine. And so if you're able to program in Solidity, you can program for most of these projects, most of these blockchains. In contrast, if you want to program for, let's say, Neo Protocol happens to be a very, very fast and growing protocol, then you want to program in Rust. Rust is sort of the other increasingly important programming language when it comes to blockchain. So one of the things I wanted to go over, although I don't really have slides about this, is sort of the rise of DeFi and how DeFi became sort of the dominant way of blockchain and cryptocurrency is being used today. So one of the things that used to occur was, again, of course, cryptocurrencies happens to be one of the use cases of blockchain. Certainly isn't the only use case. There's several other use cases in terms of like to figure out rewards to people, micropayments, things like that. Cryptocurrency happens to be a really interesting way because what one can do then is you can create a closed ecosystem. So most of these other cryptocurrencies, they are altcoins. And what that means is that each of these coins have utility within a closed system. They're utility coins. So they have an ecosystem whereby in order to participate in that ecosystem, you require that native token. So for example, Ethereum, in order to participate in the Ethereum dApp system, you really have to really have Ether in order to be part of that. So at one point in time, around 2017, 2018, there were a lot of companies that were launching, they were doing what's known as an ICO, an initial coin offering, where they would pre-sell their coins to the public. And what would end up happening in those situations, the public would buy this token and they would hope that coin ended up on a centralized exchange. Because there were only so many centralized exchanges and decentralized exchanges didn't exist, very few of those coins ended up even hitting an exchange. So then you had sort of like this big, massive controversy around 2017, 2018, when projects were unable to they were able to raise funds, but those tokens never ended up on any sort of exchange. And then those people that invested did not have the liquidity to be able to sell that token. And so there were a lot of companies that were either they were scams in that they never intended to go on a centralized exchange, or they could well have been well-intentioned. At the time, there were very few centralized exchanges. And if you happen to be functioning in a country, in a particular jurisdiction, you would only be able to use pretty much that centralized exchange that happened to be in that area. And so this is a huge problem for a lot of companies. And it was really the only way, centralized exchange was really the only way that coins would get listed. What ended up happening around 2019, 2020 is you sort of had the rise of DeFi, where there was a whole lot of decentralized exchanges. Now, a decentralized exchange differentiates itself from a centralized exchange in that the decentralized exchange does not actually have a fiat on-ramp, right? So most of these centralized exchanges, you'll notice, will have a fiat on-ramp, which will be like a UPI payment or connecting one's bank account, or basically some way to put fiat onto that exchange. In order to do that, you have to be regulated. So where if you were to, you launch INR deposits, you would be regulated in India. And so that meant that centralized exchanges were regulated in every country where they had a fiat on-ramp. Well, what people ended up realizing is that the vast majority of markets, because crypto is an international market, work on USDT, for example. So the like Bitcoin, the pair of Bitcoin USDT or something else in USDT. So it was really, the step was fiat, like put fiat on an exchange, then use fiat to buy USDT or a stablecoin, and then use that USDT to buy a cryptocurrency, like let's say Bitcoin or something else. So what some people decided to do is they said, hey, how about if we decouple that and we say, let's assume you already have fiat somewhere, and that since then you bought USDT. So if you bring USDT onto this exchange, we can swap it out for any other token without us having to have any sort of regulatory burden because we don't have any fiat on-ramp. And so a lot of companies started launching on decentralized exchanges, and that's known as a DEX. So now for a lot of crypto companies, there's two ways. There's two ways to launch. One is on a DEX and one is on a SEX. And the SEX is a centralized exchange, of course, and the DEX is a decentralized exchange. Both of them obviously have their own use cases. A centralized exchange will, of course, do some degree of due diligence. In general, the decentralized exchanges don't do any due diligence. You can pretty much launch anything on there. And once they're launched, of course, people can trade them. And you don't, for example, have to be part of a centralized exchange. You can literally just come on there with USDT and swap them out for something else. So in terms of trends, that's sort of how the DeFi really started taking off, is the sort of proliferation of decentralized exchanges and the ability for anybody to just come in there with USDT and then swap it for whatever they needed to. And then, of course, you get into subsequent models such as yield, such as the ability to earn yield on tokens, because, of course, there might be other people that might say, hey, we can take this USDT, invest it, and do a much better job of getting a return than you could. So they'll just pay you a certain interest rate, and then, of course, they would borrow the USDT. Now, one of the things that this causes a potential issue with is companies like UST or Luna. So you may have heard of Terra, the Luna token, having massively crashed. It was the fifth largest cryptocurrency. Actually, UST was the fifth largest cryptocurrency in the world, and it crashed down almost to zero. And the main reason this happened is because Luna and UST was essentially an algorithmic stablecoin. And so these two tokens were linked together, where if you bought one, essentially that burned the other. And when you have this algorithmic stablecoin, a lot of people start using stablecoins, which is like USDT being one of them, as what they consider a safe investment and to hold their money pending other cryptocurrency investments. Well, USD had not been really vetted really well, and so people didn't really understand it. And so there's a massive danger of, a stablecoin like UST or USDT somehow becoming market dominant before people realize that there's a problem with it. And then that could essentially destroy the entire market. And that's kind of something that could have almost happened with UST, unfortunately, but with UST, people caught on before there were too many apps and too many things that depended on UST. So these are sort of like overall general trends in terms of where Bitcoin, blockchain, really the whole industry is moving. And I think now would be a great time to maybe take some questions.
Jatin, just to moderate quickly some questions. Jatin has posted a question on the chat box that I've learned the solidity and blockchain development, but want to make future in finance like DeFi or in NFTs. Can you suggest something? That's his question to you.
Sure, absolutely. Learning Solidity is great. It's a great start. DeFi and NFTs, I'm not sure if you want to create your own NFT project or create your own DeFi project. If you are trying to create your own DeFi project, then of course Solidity can be really, really useful. One thing that you have to realize is a lot of, and we make a lot of investments in this space. And so a lot of companies that we interact with are like development heavy. So for example, they've taken a lot of effort on making a lot of development, but haven't quite given a lot of effort to strategy and the overall business of actually launching a project, which in and of itself can be, quite challenging. So the best thing I would suggest is, if you're looking at DeFi and or NFTs, and let's say DeFi, for example, look at what other tokens that are being launched, other DeFi tokens, what they're doing, and then try to add something unique to that space, and ensure that your token has utility. If your token doesn't have utility, people will sell it, and you'll have a lot of downward pressure. As far as NFTs are concerned, NFTs, there was a point where collectible NFTs seem to be putting up a lot of money, but now most of the NFTs that are popular are NFTs that have some sort of utility to them. So they have utility built in, and essentially owning that NFT allows you to either access areas that didn't exist before, or sort of be part of a community. So the Bored Ape Yacht Club, for example, it's actually a yacht club, and essentially having a BAYC token allows you to be part of this very exclusive club when people sort of trade investment tips and things like that. But interestingly, one thing I should add is NFTs by themselves are very, very difficult to invest for a VC, because you can't really value an NFT. Because they're fungible, because they're non-fungible with relation to each other. You can never really figure out what the fair value of an NFT is, because they're not being traded. So now a fungible token, in contrast, it's being traded on an exchange. The price of the token on that exchange is set by market forces. Whereas with an NFT, you can't compare one NFT to another, and therefore you can't decide what market forces are used to value that NFT in the first place. Okay, let's move on to the next one. Prerequisite for beginning blockchain development. I mean, if you have a background in Python or C++, that could certainly help. I don't think so C, for example, would definitely help. I know with Solidity, a background in C++ would certainly help. But I think clearly a lot of people are going to ultimately come to blockchain without having gone through, another language, come to blockchain programming, because simply there is just such a massive demand for blockchain programmers. So I can tell you this, there's a whole bunch of companies that raise a lot of money and now need to show, development for it. They have to show that they're putting out, they're putting out something useful. And so now there's a massive global shortage of blockchain programmers. So certainly something I would definitely suggest everybody should look into, because, and again, also look into, if, for example, you are not particularly good on the development side, and this, software development isn't your thing, then also look at the business side of blockchain, right? Because there's a whole bunch of jobs in this industry that don't focus on development. In fact, arguably the higher paying jobs don't focus on development. It's good to have some background from a development perspective, because then when you ultimately hire developers and when you're managing them, then you have a step up in terms of being able to communicate what you need from them, and also an understanding of what's possible and what's not possible. But also definitely, like I said, taking into consideration that there's a whole bunch of projects that require business development, for example, that require marketing, that require PR. These are massive elements of blockchain. In fact, the development, a lot of companies, that are supposedly technology companies, even, a lot of them have essentially fully outsourced teams. So it's really, the value comes in not from the development aspect, but it comes in from the business aspect, from being able to understand what your model is, what the token is, how do I build value within this token, and how do I make it useful for somebody to want to invest in. So that's the whole concept of what's known as token architecture and tokenomics. It's essentially, from a perspective of a project, creating a token that over time has value within a closed ecosystem. And over time, that value is locked in that ecosystem. So the price of the token has nowhere to go but up. And so then, therefore, they become pretty attractive, in some cases, investment opportunities as well. But the main point is you're assuming that most of the people buying a token are actually going to be using it, within the system.
Right. There's another question by Jatin. Could you suggest some business-related books on blockchain that probably would be helpful?
It's funny. I haven't really found any really good books, business books on blockchain. There's actually a book called, if you're looking at the more technical thing, you're looking at like the history of blockchain, a book called Bitcoin Basics, which talks about like Bitcoin SV. But that is like sort of more technical. If you're looking at like the business aspect of it, one of the things I would suggest you do is just sort of follow the influencers. So like Moon Carl is a great influencer. BitBoy is another influencer. They're also guys that really understand the industry. Coach K, my friend, Coach K Crypto, name is he calls himself Coach K on YouTube. So these guys put out excellent videos. They really explain kind of like what each of these cryptocurrencies do. There's also a YouTube channel called Economics Design, which basically covers tokenomics in quite a bit of detail. And if you're interested in understanding how these tokens work, that would be a really great place. One of the things in terms of like, what's a great way to get into this industry? I had a colleague that actually started off as a community manager in a project, and he basically was, I don't even know if he got paid for that particular project. He was there for almost a year. He just sort of was watching everything the project was doing, like what was working, what was not working. Shortly after that, he became a community manager at another project, essentially a community manager, just as somebody who handles the Telegram and sort of helps grow the community. And he did that at another project for about, 8-9 months. And then subsequently, had so much experience that like after he volunteered at a third project, very soon he was able to be a co-founder himself and learn to experiment basically on these other projects, and eventually was able to co-found his own project. So if you were to join this is a great masterclass to join, to really become a pro at blockchain and cryptocurrency, and also to get the best blockchain jobs in the market. The higher packages essentially go to people that really understand the industry and understand how things work. And this is sort of the best way to get that knowledge.
Right. So this books was a private question, and Jatin is wanting to know about what all business job opportunities can be available in the domain of blockchain.
That's a great question. So in terms of job opportunities, one of the best, so like I mentioned, right, like probably if you're starting at the bottom, which is not a bad place to start, you could really just get started as like a community manager. Even an intern in a project that's growing really fast, you can learn an enormous amount. It's one of those things where you do have to pay your dues. The crypto industry is a really tight industry, and they really value people being there for like a really long time, because generally speaking, if you were like a scammer, you probably wouldn't survive more than a few months, because you'd have an opportunity to scam somebody and you probably would. So in order to break into the crypto industry, you do sometimes have to be part of multiple projects for a few years before you start being taken seriously. But then once that happens, it can be highly profitable. Like I mentioned, the person that I know that co-founded that company, after a couple of years of basically getting paid very little, now he's a millionaire on paper based off of the company that he founded, that he co-founded. So, it's certainly a good place to start as a community manager. Other than that, of course, there's in development, there's sort of Solidity programming, and the standard software hierarchy that you'd find in any other software company, except of course the main language being Solidity and or Rust being another big thing. So then, and then of course there's other areas like business. I mentioned business development. Business development is a huge thing. Most of the business development happens on Telegram these days. So you have like hundreds of groups with multiple relationships that you have to keep up with. You have to constantly take care of it. Investor relations. So every company that has raised funds now has a bunch of investors that all need to be like kept happy and constantly updated about their project, about the updates of the project and how the project is going. So these are all areas where you could potentially fit in. But I think you're looking to just get started and like learn the most in terms of having the broadest, look at something in the community manager sort of area, because it'll give you an exposure to like what projects are doing, what multiple projects are doing, and what is successful. Because ultimately, a lot of a successful project, crypto and blockchain, this is a hype-driven industry. So a lot of these successful projects are massively dependent on the project's ability to market what they're doing. So yeah, so that marketing is also a big thing. Writing. So crypto projects require like a whole bunch of constant text. That's like Medium posts, blog posts, contacting, multiple different sources that you want to put out, like news, let's say on press releases that you want to put out. So every time something happens, you have to put out a press release. And as those things add up, your company becomes more and more, people consider it more and more legit. And so that you want to be constantly putting out information, and the average crypto project just puts out like just tons and tons and tons of content. And then that's just one part. Then of course there's graphics. I know of a company that has like 2 or 3 full-time graphic artists, and that's all they do is they basically do the graphic work for Twitter Spaces, the graphic work for launches, video graphics, the website. Like basically all these things end up becoming useful for a crypto project. So they'll typically have a web designer, they might have several designers, they might have several writers on staff. So those are all potential areas that you can get in. And I think, again, this is a great masterclass to start on that journey.
Right. I think you've elaborated, you've delineated, and it gives us a lot of access to understanding what all opportunities are available. There's a general and specific question by Aditya. The general question is that what are the prerequisites for beginning the blockchain development part? And there's also a specific question that he's asking, that is C++ loan enough for being a prerequisite, or is it mandatory to have complete knowledge of JavaScript as well?
So, I mean, like any other language, you can certainly start it from scratch. Yeah, I mean, I wouldn't even necessarily say that's a prerequisite. Of course, it helps having some sort of basis in programming, but I don't think you really need to have, and you certainly don't need it to have a complete knowledge in JavaScript to get there. You can definitely start from scratch. There's a whole bunch of books on Solidity programming. There's a company called the Blockchain School.io, which is doing that as well. I mean, never mind, but there's a whole bunch of great resources that you can check out if you're just starting to program, especially Masters Union, for example.
So there's Swapnil asking, what do you think about current gaming industry using NFTs for skins, avatars? What is your take on that?
This is a very good question. Believe it or not, there's a whole industry built around gaming and NFTs, like that's just massively exploding. So I was at the IGDC gaming conference a couple of weeks ago in Bangalore. It was sponsored by Engine Starter, which is a launchpad that specializes in gaming projects. And a lot of these projects in the metaverse, so metaverse projects are massively hot right now. What is the prerequisite for that? So if you have any sort of history, like, designing, for example, what's the word, games in Unity, for example. So Unity 3D happens to be one of the areas people are just basic game design. So a lot of metaverse is really just individual game environments where people can interact with them. And then those are connected to other areas via like a link. So you could have multiple different metaverses, and you can just jump from one to another, like using a link. So this is ultimately going to become pretty standard. So I think there's still a lot of space in the metaverse industry to dominate, right? So Mark Zuckerberg of Meta has already said that, like, for the first 5 years, they don't believe that they're going to be making a profit. They're going to spend a lot of money. And there's also a lot of other players in the industry. So there's companies like Metaverse, there's companies like Blocktopia, BitCountry. These are all companies like working on creating metaverses. And then, a great business plan around that in terms of like raising funds for that is creating the game resources as NFTs. So where originally you had to buy, let's say like a sword, you had to buy like a certain spell or a potion to be, more efficient. You can now, those spells and potions and all that, essentially NFTs that can be bought, that can be traded. So there's actually an entire business. NFT Technologies has a sister company called Goat Gaming Guild, where essentially Goat will buy these gaming NFTs, and essentially they'll buy these NFTs that allow gamers to earn higher profits from their gaming, and then they'll let them use it. So they'll let them use, and then they'll have like a profit sharing. So these are called game farms. So there's a whole bunch of people that, like, their literally entire business is playing games online and earning tokens, and they're earning tokens using somebody else's NFTs. So for example, we'll at Goat will let them use, NFTs that allow them to double their health, double their productivity, and then there's just a revenue sharing between the person and the company. So there's literally entire companies now solely dedicated to gameplay. So Axie Infinity is a great play to earn game, and that's happening as well in terms of like entire industries coming out from this play to earn area. And by the way, a lot of games are actually funding themselves by pre-selling NFTs of these game resources, like in-game tokens, in-game shields and swords and things like that. So it's a whole burgeoning industry that, if you know how to create games, you can get into, because as long as you also have really good advisors that can tell you the business aspect of that.
Right. There's another question that Akshay is asking, and this is that will he be able to learn this particular course, the Pro Blockchain Developer MasterCamp that we're talking about here? And you've also given us like a sort of a flavor of the classroom by telling us the emergent trends in blockchain world, and how much time will we have to devote? Like ideally, it's 12 hours per week that we are specifying, but how much time will it be required? How many hours would they have to sincerely devote? And is it manageable along with a job?
Yeah,
You're
so that's a great
smiling.
question. That's a great question. I mean, the thing is, basically, you have to spend your entire life doing this. That's what I've learned, anyways. Like, I spend every waking moment like thinking about blockchain, talking to companies that are like creating tokenomics. Like, it's one of those. If you maybe if you some of you have heard of the 10,000 hour rule. If you spend enough time, 10,000 hours on anything, you'll become a pro. But the good news is that you don't have to spend 10,000 hours before you're useful to the industry, right? So I think if you were to really jump in and dedicate yourself to something like this, like over 3 or 4 months, you could get 70 or 80% the knowledge that you need to be useful. And you're certainly useful to the industry, like let's say 3 4 months in. You may not be like all the way at the top, but you certainly have a part to play, and you can certainly contribute. And then after that, the more and more time you spend on it, just the better that you get. You'd be surprised. So we deal with a lot of investors, and I've had a lot of companies come to me that have, for example, already talked to like some really big VCs. And you would think that they, and basically they have major issues with things like tokenomics. And it's like, how did this VC that you just met okay you and invest in you when clearly there's some major issues? And what I've come to find out is a lot of these really well-known VCs are kind of guessing. And they're basically like, and that's why it's so important what other VCs have invested, because they're like massively relying on other companies to do their due diligence for them, because sometimes they don't know it. So there's a lot of fakery going on. So depending on how quickly you all wanted to jump into the fakery thing, you might even be useful earlier than 10,000 hours.
Just interrupting a bit. So I would also like to add to this to Jason about Akshay's question, like how much time you have to devote every day in this blockchain program, basically. So here, what we are doing, this is particularly made for the people who are doing job, this masterclass, the people who are looking to switch, the people who are looking to notch up in their career, get a bigger package, get a hike. So this is designed particularly for them. So the classes will be happening on weekends only. So you can always join that. The timings are such that you can always, after your office hours, you can join it. So it is kind of made for the people who are in IT industry and looking for switch or getting a higher package. And mostly the classes will happen on weekends, and you will be getting some self-paced assignments and self-learning materials as well, which you will be going throughout the week whenever you get time. So yeah, so it's good for you, Akshay, I believe, because it's particularly made for you people who want to learn blockchain while doing job. So yes, yeah, you can take on Nija from.
Just to add to that, I guess my main point was it's about passion, right? Like if you're passionate about something, it's not just a question of getting through a course. It's a question of like consuming all the information you can possibly find about a topic. And if you are passionate about this, it's not going to take you long before you can, jump into blockchain full time. And massive burgeoning industry. There's a dearth of blockchain programmers. There's a dearth of people in this space that are doing great things. So all this is super useful, and you can certainly get into it while you're also studying, but it really helps to have the passion.
Perfect. I think both Shubranil and Jason, they've answered it entirely. And then, of course, the key phrase for me was you spend your entire life soaking in the knowledge, and that predominantly became really clear. Fantastic. There's also a question that Jatin is asking, that will this course only prepare them to develop, or will it also be helping them in their placements? I think Jason has already answered this, that you will be like, even if you're 3 months into the industry, you will be a great resource altogether, considering there's so many startups already. And it's amplified even when you look at Jason's illustrious LinkedIn profile. You'll be able to see the kind of contribution that he's done. But Jason, over to you. So do you think that the course is just going to be limited to developing only, or developing particularly the decentralized app on Ethereum, the Hyperledger, but that you said was only giving a proof of the work? So would you like to probably specify that in greater detail?
Sure. So I think this is this course is for also people that want to understand from a business perspective as well. I'm certainly happy to, help explain that to people that have questions on, the business aspect of blockchain and what, sort of how that's put together. I'm certainly, open to discussing that. In fact, definitely happy to do that. And I believe, yeah. So I would say that this course is certainly like open for both types of people.
And to add to that, I would like to add that we will be having regular startup weekends following blockchain and all these things that you learn. So we will be covering healthcare industry, fintech industry, gaming industry, metaverse, and whatnot. These will be the themes of your pitches, which you will be giving, you will be preparing. The whole environment will be not to build a product, but how to market product, how to get value out of it, how to get into sales, how to get into corporate relations, and all those stuffs. You can always go to the link of the page and you can see what other than learning blockchain, what other than learning the technical aspects that we're going to cover during this program. So it's not only learning core technical things, you will also learn how to market the things, what are the people you need around to market your blockchain product, maybe your DApp, these DeFis, your NFTs, your tokens, whatever you will be building your own wallet. And there is a possibility that you develop some kind of token of yours, and at some point of time, someday, you will be paying through your token to Zomato, to Swiggy. So there is a possibility, and you can always pitch it up in our startup weekends that we are going to have during this program. Okay.
And also one of the things that I will be talking about in the future is tokenomics, and that's essentially how to create an economy around a token that would make that token attractive for investors to pre-invest in, that you can use to essentially fund your startup until you do a launch on a decentralized exchange. So I will be covering that, and I think that'll be very, very useful for people that are trying to understand the background of how to basically come out with an actual product that works.
Right. I think by and large, all the questions have been answered. Akshay, you can take a look. We've shared the details. All the details have been mentioned there. And to talk about the hybrid component, as Shubhranil was saying, that there will be events every fortnight that you'll be participating. And those events, we invite you to come and visit the campus. We are based out of DLF Cyber Park, which is opposite Ambience Mall in Gurugram. So you're most welcome while you're a part of the MasterCamp. That's the hybrid component that you get. And you're also leading, there are also satellite campuses across the so-called country. So you would be able to partake and soak in a lot of your peers' learning as well. I think by and large, we've answered all the question. Any last notes that you'd like to probably address all the audiences, Jason?
Sure. I'll just very quickly say the way I got into blockchain in the first place. Very quickly, I'll cover that because I think that might be interesting to some people. I got into blockchain. I was actually a writer. I used to write a column. Well, among other things, I used to write a column for Globe Asia every month on technology. And then I discovered Bitcoin around like June 2013 when Bitcoin was $13. And I wrote a few articles about it, both for my column and also for one of India's largest selling magazines called Man's World Magazine. And it was called Bitcoin for Dummies. And that's when I bought Bitcoin for the first time. It was like $13 at the time before Bitcoin. And then I think 6 months later, India opened up its first cryptocurrency exchange, which was Unicoin. And then eventually it came here. But it wasn't until at the time I had like an IoT startup. And when that had really hard time funding, essentially being able to be funded, I pivoted that to a blockchain company, and I found that it was much easier to get funded, and then very soon joined a few other people that were in also in blockchain. So it was really not something that came organically. It was more like, well, if I need to raise funds and I need to do it via a token, I need to either like get a crypto expert or become one myself. And so in the process of trying to find one, I just ended up becoming one myself, basically.
That's such an interesting narrative. Thanks so much for sharing that anecdote. And I think what a brilliant end to wrap up this particular session. Thanks everyone for joining. Thank you so much, Jason. Thanks, Shubhranil, for your time. We look forward to hosting you in the future webinars as well, where we'd love to know more about blockchain technology. Thanks so much.